Everybody, happy Friday. I'm coming at you live from the Catskill Mountains. It's lovely up here. Welcome to the morning show. There are some days when it's quiet and we have to kind of just figure out what we're going to talk about. And there are other days where like the show basically runs itself. Today is going to be one of the latter days. So much to talk about today. Storylines, of course, we have the bank earnings, right? But yesterday, just that wicked rotation. We were talking during the show, Steve was, about the lack of volatility in small cap land. And then, like an hour later, that resolved itself. So, a lot going on, a lot in the way of storylines to talk about, the rotation from large to small sector, a lot going on. So we will cover as much of that as we can. Mike Singleton is our guest today. He'll be on at around 9:10 or so. Unfortunately, no Louis today. Louis is a little bit under the weather, so we'll have a somewhat of a crypto Friday without Louis if we can. And that's the plan. We'll have Kenny, we'll have Alfonso, we have you. What up, chat? I see you. How we doing? Let's go. Smash the like, please. Appreciate that. Likes do help.
All right, guys. Happy Friday, Crypto Friday. What's up, Mr. Strazza? Did you miss us? Did you miss me?
I always miss you guys when you're gone. But we had our fun.
Did we get? Do we have a pick? Do we have a Baltimore pick of Spencer and me? Have you shown that one?
Oh, I didn't.
Good one.
I didn't put any of them in the deck. They're not.
Throw up slide 2 so you can see what a good time Spencer and I were having.
How was the game?
Wait, which one is this?
Throw that. Spencer's like reviewing the picks before we share them. Is that what's going on there,
Spencer?
No,
this is the one that is acceptable.
Got it.
This is the acceptable one. Well, we're soaking wet. We're drenched in this picture.
Nice.
Yeah. My hair is flicked back. We're soaked.
It was awesome.
So did the game get like rain delayed or something?
Yeah, it got rain delayed.
Wow. That's why you guys got home so late?
No,
we didn't get home late.
No,
we were in bed pretty early, as a matter of fact. You think we got home late?
No, he's talking about the morning after. I was stuck in traffic. What can I say?
I have been reading. I'm getting all set up here. I have been reading the Bitcoin Standard.
Yeah.
Have you read it yet, Strazza?
No.
So the Bitcoin Standard. I've had the book for a while. I had been meaning to pick it up and read it. Life gets in the way, right? Been busy. And then David Cox comes in the other day. Yeah. Love David Cox. And he starts talking about the book. I'm like, I really need to read it. Like, it's kind of like, at this point in my life, the fact that I hadn't read it it's kind of messed up. Like, I needed to read it. So anyway, I'm almost done with it. Dude, this guy, I don't know anything about the author, which is rare. Usually when I'm reading a book, I know a whole lot about the author. In this case, I know nothing about the guy. I can't even tell you his name. Yeah. It's got like a lot of vowels in it. And like Amos or something. And I'm sure he loves his kids. I don't know anything about him. Mm-hmm. Dude, this guy is ripping Keynes. Like, the whole book is just like, first of all, the first 2/3 of the book has nothing to do with Bitcoin, which is hilarious in and of itself and awesome, because how much could he possibly talk about Bitcoin? A whole book? That seems like a lot. So it's more like the history of currencies.
Yeah.
Like going back thousands of years, right? So that part is really cool. Like, even if you are never going to buy Bitcoin, you don't care about blockchain or whatever, like you just dismiss it, it's over. You should still probably read it just as a history lesson, because there's so many like cool, I had heard a lot of these over the years, a little bit of this, a little bit of that, but putting it all together in a series of chapters to go over the history is great. He crushes Keynes though. Like, I understand Keynesian economics. I get it. I'm friends with a lot of people who have been abusing Keynesian economics since the Great Financial Crisis, really. Even before that, right? Greenspan and all that stuff. Dude, this guy takes it to a whole nother level. He's calling Keynes a pedophile. Like, just like, like cruising the Mediterranean, like going to like children brothels, like this guy's going all out on Keynes. I don't know if it's true or not.
What does that have to do with Bitcoin?
Because he's abusing, because Keynesian economics includes government spending as part of, like, the growth, progress in the economy and stuff like that.
Mm-hmm.
So he abuses Keynes, talking about how Keynes came from a rich family. He never studied economics. He was handed everything. And then he would just, like, go running around the world having sex with all kinds of, men, female, like, doesn't matter. Like, this guy was wild. I didn't realize how bad of a person he was. Like my understanding is this guy, and I did a little homework after that, this guy was a terrible, terrible human being. That's what it seems like. I didn't know that about Keynes.
The more you know. I had no idea either.
I thought he was just like a bad economist, which is redundant. And it's known that he was a flaming homosexual. Like, we know those things, but I didn't know, which is fine. You could be a bad economist and not be a bad person. There's nothing wrong with being gay. But this takes it to a whole nother level of just pure hatred of, the bastard.
This also just seems like a thing, like anybody who's old or these figures in history. We always have to find all these terrible things about their personal lives. I don't really care about any of their personal lives. That's not why Keynes is famous, but interesting nonetheless.
Yeah. Anyway, I highly recommend it. I can't believe it took me this long to read it. I'm almost done. The author is very angry. That I did.
Sounds like it.
Yeah, it's very, like, this is not like and it starts getting dark, like, towards the middle. Like, he starts getting angry and angrier as the book progresses. It's my observation. I'm recommending the book, so I'm not hating on it.
The hardcore Bitcoin community, they're not the most ordinary human beings, hanging out in those corners.
This is true. This is true. But we know happy Bitcoiners. We know happy, DeFi people. This guy's pissed. This guy is. Anyway,
you ready?
The Bitcoin standard. Highly recommend it.
Are you ready to talk about the coming great rotation? Is that what you want to talk about today?
Speaking of bad economists, that Burton Macchio guy. Holy shit!
Oh, we're not done shitting on people.
This guy, this is the hate on economists show, ladies and gentlemen.
What's happening here? Can we move on?
Yes. Well, we're going to get into the state of the markets now, but I wanted to preface with what happened yesterday. If markets were efficient, what happened yesterday would happen once every 500 million days. Once every 500 million days, if markets were efficient. So, I'm going to take the under. And state of the markets. Let's go.
Things that have never happened before happen all the time in our line of work.
500 million years, bro. Come on. 500 million days, excuse me. Still.
All right, let's talk about them. Let's talk about these charts.
All right, we've got the Dow futures doing nothing this morning, but above 40,000. For the Dow futures. Hello, Dow 40,000. Anybody care? Anybody home? I think that's cool. S&P futures doing nothing also. 5640 for S&P futures. NASDAQ futures also doing nothing. Above 20,400 for NASDAQ 100 futures. 30-year bond futures selling off. Giving back some of yesterday. Still above 119. Crude oil up 1%. Above 83. Copper up 1%. 455 for copper. Gold down 1%. Back to 2,400. Silver down 3%, $30.70 for silver, as the volatility index, by the way, still under 13, which is interesting. And then, of course, over in the old funny money, you've got Bitcoin down 200 points today, 57,150. Ethereum down 1%, just above 3,000. Solana flat on the day, 135. Binance 5.25, flat on the day. Total crypto market cap, Spencer Israel 2.06 trillion. But I would be remiss if we didn't start out with chart 3, because this is something. What do you think?
Yeah, best day for the Russell 2000 all year. But
was it?
Yeah, I think so. Yeah.
New 52-week highs for small caps. What are we thinking about that?
The reversal is in. Yeah, best day all year. Best day since November 14th of last year, which was the momentum thrust then and the breath thrust off of the Q4 lows. So this is the first. This was the best single day of the year from a breadth or market internals perspective.
I'll throw up the next one so you could really show. It's funny because I was noticing I was in Baltimore on Wednesday, and I was on the phone and I was in a meeting and I just had to be there. I wasn't really paying attention, and so I was looking through charts, and I was just noticing just like how narrow these Bollinger Bands were, right? And I was just kind of laughing to myself. I was like, oh, I'll probably ping the guys to like run some stats, write about it. Well, here you go. From volatility contraction comes volatility expansion, no?
You can usually see it in the chart, right? When you want to pull up an indicator like this, which is just the width of the Bollinger Bands, 2 standard deviations, 20 period moving average. When you see the chart, though, this thing's been coiling all year. You got to start to think, we're pretty tight here. We pulled it up, tightest volatility, right? Or the most contracted we've seen, this volatility indicator, since right before the pandemic sell-off. The thing we don't know about this when we see something like this is what direction does it pop in, right? When that volatility starts to expand, are we moving up or down out of this range? Back in 2020, it was down. This time it certainly looks like it's up, and we're getting that momentum thrust and a breath thrust in a way to kind of confirm yesterday's action. So the question in the chat is, how material are we thinking yesterday was? We need to see follow through, right?
Yesterday was the follow through,
Strazza. No. I think this is a decisive resolution in the trend of out of big cap tech into small caps, right? I think you need to see follow through in that. That's the next
fine, maybe on an absolute basis, though. Yesterday was the follow through. In the small caps, you saw it in regional banks, right? Regional banks had already gotten going. Industrials got going 2 days ago. Follow through yesterday.
For small caps, it was the breakout candle, and even regionals, like 3 really, really solid candles in a row, but they still have a level to get through. So it depends on where you look, I think. You know, we were saying the same thing about home builders. Was it follow through? Some of them are back above their range high VWAPs, you know, and had a couple nice candles. Depends on the chart. But small caps, I think that's the breakout candle yesterday. Now you want to see them stick it. I think they do. I think that was a loud breakout. I think the relative readings we saw yesterday, if you go to the next chart too, also would support it. It's not just that this was the best day ever in terms of outperformance from small caps relative to large cap tech. And this goes back 25 years. Look at where it's happening. If you go to the next one, Bonds, you could see it a little bit better because I used the Russell 2000 index instead of IWM just to get a little bit more price history. Where is it?
By the way, this is all time because the XLK launched in '98.
Chart 9.
That's the largest
all time
1 day spread between the Russell 2000 ETF and the large cap tech ETF ever.
Yes. So this speaks to this rotation everybody's been talking about since yesterday. Money was pouring out of the leaders, out of big cap tech, right, and being redeployed into, you know, small caps, which are just now printing a trend reversal. But look where it's happening, JC. The same exact place this ratio bottomed during the .com 25 years ago. There couldn't be a more logical place for this trend to reverse back in favor of small caps, which is something we haven't seen in forever. And there's not a better signal you would look for that kind of reversal when it takes place than some sort of, you know, monster momentum thrust, the largest 1 day rate of change in history. So it's.
And I want to be clear about something I think is really interesting, which is the next chart there, Spencer. If you could throw that up, this is specifically large cap tech. People are like, oh, they're selling tech today. No. They're selling mega cap growth. That's what they were selling yesterday. In fact, small cap technology closed at the highest levels all year yesterday.
Yeah.
Up 134 basis points for small cap tech. So it's not a tech thing. It's a mega cap growth thing. I just want to be very clear about that. And throw up the next slide. This is the Russell 2000 value ETF, which looks better than the regular small cap Russell 2000 ETF, right?
Yeah, this looks great. This is another base that's ready to go. Throw up the biotechs. You know, you made a great point yesterday in our meeting There's more and more charts that we could look at now at the index level, the sector level, the industry group level, internationally, talking about emerging markets, more and more charts that we could look at and say, the trend is now up. Path of least resistance for this group of stocks is now higher. That's breadth expansion. Biotechs checked that box yesterday, I think, in a big way.
Yep.
And you're right, JC. It's profit taking in the best ones that have had the most profits this cycle. The scary candles yesterday were in all of the best stocks.
So sector rotation is the lifeblood of a bull market.
Yeah.
So for people asking whether what happened this week is evidence of the end of a cycle, the answer is historically it is not evidence at all of the end of a cycle. It further reiterates that we are nowhere near the end of the cycle, that sectors are rotating. And if you go to the next chart there, Spencer, and show industrials, this is the chart that we've been pointing out saying, listen, if this is the end of the bull market, if this is the end of the cycle, you're going to start to see some of the most important sectors in America complete tops. Yeah. That's what happens towards the end of the cycles, right? Tops are completed. If this is not the end of the cycle and this is just good old-fashioned sector rotation, then the buyers are going to come in right at support and rip them higher. And guess what they did? The buyers came at support and ripped them higher. That's what you see in bull markets. So I'll be the first one that's going to go out there and call out different data points, different developments that would suggest that we are late in the cycle. I'll be the first one to point that out. This is the opposite of those things.
It's such a great point. These ones already completed reversals, but the chart like biotech or Russell 2000 would suggest we're just getting started. I know the large caps don't look like that, right? But maybe the Russell 2000, I would argue, is a better representation of most stocks and the broader market. And that one's telling us we're in the early innings. Patterns like this, JC, I feel like we might be at the top for picking failed tops because everything that has looked like this over the past few months has not been what you think it is. It's not been a top.
Well, it was what we thought it was.
It's exactly what we thought it was, but it's almost like too good now because none of them have been tops. Zero, which makes me think it's time to do Crypto Friday and talk about this top in Bitcoin.
Shall we?
What are the odds that that one's different than every other one?
Spencer, press it. Hit it, Spencer. Hit it, baby. No? Not today?
Spencer
in the Catskills? Do they not? They don't have crypto in the Catskills?
Come on, Mountain Man.
I'm here. It was fast. That came out of nowhere. I wasn't quite ready. I'm ready now.
Are you in a log?
Well, all right. Dawson, the irony is just now, finally, the market is getting bullish. Market was getting bullish 2 years ago. 2 years ago. This is the market staying bullish, you see. Just
someone in the chat saying it's not sector rotation. It's more just a broadening.
No, it's sector rotation.
It's out of
It's both. It's broadening and it's sector rotation.
It's a healthy broadening because more and more stuff is picking up the slack. Yesterday, everybody was complaining about the indexes being down. Like 90% of stocks, 95% of stocks were higher across different universes. So our freshly squeezed list, JC, yesterday, 95% up day.
Not surprising. All right. So talk to me about the impending collapse of cryptocurrencies as I finish the Bitcoin Standard book. Highly recommend. Even though the guy's mad angry, still a good book.
It's just been so slow though. Like on a day like yesterday, everything's ripping. Small caps doing what they were. Where are you, Bitcoin? What's going on? And especially after you get that little shake, you want it to go, right? You don't want to just sit around here too much longer, but Bitcoin taking its sweet old time right now.
That micro strategies though.
Well, they split it.
They split it?
They announced a 10 for 1.
Did they?
Yeah.
Okay. I mean, that doesn't mean anything. I mean, that's just mental masturbation. Doesn't actually.
But you should have seen the stock when that news hit the wire.
What did it do?
It was up 10% pre-market. They announced it at 8 o'clock yesterday.
Closed up 4%.
I know. Give it back.
It doesn't matter. It doesn't matter at all. These splits, it's ridiculous. It doesn't change anything.
But the stocks move. So the market's stupid. You're the one over here pounding the table about inefficient markets. That's just a part of it.
When you're right, you're right, Strazza. When you're right, you're right. That's right.
All right. So tell me, what are you doing here?
What am I doing about what?
What's the move here?
What's the move in Bitcoin?
Yeah.
The move is exactly the same. If it's below 60, you don't touch it. I mean, it's that simple for me. I like a trade long above 60 and then putting on a real position on a breakout above 70, right? Like that's how I'm thinking about it. So what am I doing right now? I'm not doing anything about Bitcoin. Bitcoin's not my problem. The micro strategies, on the other hand, that one is pretty interesting, and it has nothing to do with the damn split.
Well, it's not going to move in a different direction than Bitcoin. I got news for you there.
That's probably right. Right. So we make money in micro strategies. I'll probably get triggered and enter a Bitcoin position. Yeah. So what?
I'd rather
maybe. I mean, probably, but maybe not. Maybe not, but probably. No.
I own very little Ethereum.
And even down the cap scale, some of these alts, like, I mean, there will be opportunities, I think. Like, look at Pepe back down below the March highs. Like, that's not good.
Yeah, the Solana dog coins were getting hit last night.
Yeah, they were. And the cat coins, too. Yeah.
We'll see.
Yeah, we'll see. Yeah, we'll see. Interesting, the correlations have been coming off, right? Yeah. Remember the old days? It was like, this is a great example. It was like, Bitcoin's just an extension of technology. It's an extension of the NASDAQ. Well, no. Like Yada is asking, is Bitcoin a leading indicator? Clearly, it is not.
Was yesterday the moment where Bitcoin traded more like a Mag 7 than any other tech stock?
I mean, I guess. What do you mean by that exactly?
Like crypto didn't know who to trade with yesterday. The interest rate sensitive stuff or the Mag 7s?
I mean, this late in the cycle, correlations keep coming off. Correlations spiked pretty good yesterday, right? All the rotation into industrials, small caps, materials, all of these cyclical areas, regional banks, all these cyclical areas that have kind of been left behind by maybe some of the mega cap tech and semis and things like that. They all move together. So correlations certainly spiked yesterday in those areas.
I know. It felt like 2020 again for a day.
Don't kill me, but you know what I'm doing about cryptocurrencies right here?
What are you doing?
I'm buying Berkshire Hathaway. That's what I'm doing. That's my crypto trade. Crypto Friday trade, buying Berkshire Hathaway. Uncle Warren is a G. Let's go. 500 for Bitcoin. For Bitcoin. Freudian slip. 500 for Berkshire Hathaway, which is essentially a hedge fund of financials. I think Strazza with some industrial exposure there.
You know who's not buying Berkshire Hathaway today?
Who's not buying what?
Warren Buffett?
No, Kenny Glick is not buying Berkshire Hathaway today.
I see what you did there. I see what you did there. By the way, Berkshire Hathaway, yesterday we were talking about Eli Lilly, potentially the next $1 trillion company. I will take the under, and I will say that Berkshire Hathaway is going to be the next $1 trillion company. How do you like me now? How do you like them apples?
I love that. That's good. Really
you get
good.
it? How do you like them apples? See, because
he's owns
a lot of Apple.
Oh, yeah. That's good.
See that? That's good. Pretty good, right?
Not bad. Teddy, you want to come on? Let's do it.
It's been a long time coming. They ain't come from my club, they took it. Putting up numbers, 99 pounds, and I still kept it 100. Hola. Yeah.
Kenny Glick in the house.
Hey, what up?
Dude, can you believe that I had some Karen email me the other day telling me we play too much hip hop?
Oh my God. We're only playing Yacht Rock today. I went to the called the Yacht Lobsters yesterday, and it was fantastic. I have not seen my wife in that good of a mood in a very long time.
Yacht lobsters.
If I only known, she knew every lyric to every song. But I got to tell you something. The song "Oh Oh Oh" has been ruined forever. We actually started singing the Ozempic song, and I was like, "We're all losers right now. We're all losers." It used to be a really good song, but now it's been ruined by the Ozempic commercial. But yeah, good times, man. What's going on, brother?
It's a bull market. I don't know if you heard, Kenny.
I heard, but yesterday was one of my holidays. So, again, I'm always short the cues in the morning, and I'm always having to cover and go long, except for yesterday. It was actually pretty damn exciting.
And this is why. Can you slow down?
Yeah.
Why? Because it never got back above the VWAP?
Yes. We actually tested from underneath, and then we went to a prior day VWAP, and for the first time in about 60 days, we broke it. And then we went cascading, which is my favorite trade. I call it the finger of God. It's the rollover, which kind of scares people because everyone's expecting every dip to be bought and then start to break out. And then when you roll and you get that curl, kind of like the finger of God, the F5 hurricane, I stole it from Twister. And then we started just crushing everybody. Not only did we break prior day VWAP and prior day low, but we started to break 5-day VWAP. We actually went to a 10-day VWAP, something we haven't seen since May 31st. So it was pretty damn exciting, and came right back today, and we're just looking at banks, again. So that was a one-off. We'll see what happens, as far as this gap, the small gap today. But I go right to the banks. That's what I've traded so far.
And
this
when you
morning.
say banks, my suspicion is you're talking about regional banks, not the big money centers. Do I have that right?
No, we're going Citibank, Wells Fargo,
Ooh.
JP Morgan. Yeah.
Excuse me.
Yeah, wait, hang on. Let me see if
I feel like I don't even know you.
I know it's so crazy. I failed you here because I don't have my screen ready, but let me get it up for you. 1 second.
I like how you brought your bull market shirt. That's a very Steve Strazza-esque.
I wish I would have worn this yesterday. I went with a little fish kind of thing, and I couldn't find my captain's hat.
We've been leading the league in chest hair here on the morning show lately. I don't know if you guys have noticed. Kenny Glick coming in here, keeping that chest hair off. Who did we have here the other day that had his whole shirt open?
Oh man, I didn't know we could go.
Oh, Stephen Place, I think.
Oh, don't. I keep my house a little bit too warm because I can't afford air conditioning because I grew up without air conditioning back in the Brooklyn days. But yeah, if we can go topless any day, let's go.
Yeah,
but check it out. Let me show you a couple of charts. This is what we do. You got your Citibank, your JP Morgan. They came out with earnings. Right now, you're just looking at a 1-minute chart. Blue line's today's VWAP, orange line prior day VWAP. Big monster candle on the first report, and then you start to break down. I'm just looking for a reason to buy, and that reason to buy is basically the VWAP break. So I'm a buyer here, and again, I don't trade big size in the pre-market because there's not a lot of volume, and you could get hurt. But if you do 300-400 shares of this thing at 205.87, you got up to the 207.50, and there's a payday. And again, as a day trader, we're just looking to get paid. Citibank was even better because it actually had a decent report and just sat there and consolidated and then broke new highs. I took advantage of it around 67 when it broke the whole number. You got about $1.50 out of that one. And then the dud really kind of was Wells Fargo, but still, we got a little bit out of it, and I'm still in this one because it really hasn't moved. I'm just waiting for it to do something here. We got to the blue line, bought it here at 56, 56.90, still in it, waiting for something to happen. And the idea is if we're wrong, occasionally you do get a trade wrong. Really? You'll just sell it and take this half-point loss because that's your little pivot point from the pre-market. I'm in this thing, and this one doesn't look so hot because I was expecting it already to be looking, with the other two banks. I would figure we get 57.50 again already. But, again, no reason to sell unless you have to.
Do you always enter your stops immediately after entering the position?
Well, generally pre-market, you don't have a stop. So it's just your finger. You're just sitting there hovering over the prices that you're going to get out at. And, I'll throw the offers out, thinking optimistically, buy something, throw an offer out, because in the pre-market you do have a lack of liquidity. So what I like to do is for instance with Citibank, as soon as I'm in at 67, I'll throw a couple of offers out there at 67.49, right underneath the half. And if you spike on low volume, you're sitting there waiting to be bought, and you get a nice 50-cent move quickly on really relatively no volume. So again, and then we revisit these trades. So once we get the consolidation and the first 15 minutes are over with, then we start looking at options. Because yesterday, if you guys waited just a little bit longer for that Pepsi trade, come on. I mean, beautiful move yesterday on the Pepsi. You know, again, they wash it out. You got over the VWAP, you got back above the pre-market pivot line, and then you got over the prior day VWAP, and you still had plenty of room to go. And if you're looking at only options, you had only the 160s or the 162.50s, but you still got yourself a nice 100% gain on the Pepsi. And Delta Airlines, you know, it was boring, but as the market's tanking, let me get rid of some of these lines. And this is what's so fascinating about these trades. And again, you were talking about sector rotation. Sure, the Qs were getting annihilated, but they were buying Delta. You know, they just kept buying, and the market was rolling over, and Delta was hitting new highs. So we just stuck with the Delta, and we wound up getting about $1.50 out of this one also. So earnings season has started off pretty damn well. Delta, Pepsi yesterday. And today we're probably gonna revisit the Citibank, the JP Morgan, and the Wells Fargo.
What an outside day in Pepsi, man, for sure. And let's remember that consumer staples historically do very well in bull markets. We're like, well, staples are doing well, so that's not good. I don't know. Go back and look. Consumer staples historically do very good in bull markets. They tend to underperform for the majority of those bull markets. It's when they start to outperform that is very late cycle stuff. The fact that they go up on an absolute basis is not a bad thing. It's actually perfectly normal in bull markets. It's actually a good thing. Stocks going up is not bad for the market. Can you believe that, Kenny?
I don't think anything's bad for the market. Yesterday, I think is probably just going to turn out to be a fart in the wind. But, you know, yesterday's lows were important. Today, that 490 is important on the QQQ. And when I say the market, I'm generally talking about the Qs. That's my market. I know I used to be a diamond guy and the spies, but
the only person I knew who traded diamonds, and now that you don't trade diamonds anymore, now there are zero.
Yeah, I don't even look anymore. But I'm a big QQQ guy, and obviously today with UVXY is going to be a tell. If there's going to be any residual selling out there, UVXY has to wake up. It has to be above 2150 at least. And if you see UVXY trending up today, then you know we might have a little bit more selling to be done, and that would get exciting. I would be excited. I love a Friday sell-off because Friday sell-offs tend to scare people even more because you're just dreading the weekend, and you sometimes get those crazy no-bid closes. So I'm going to be sticking around all day today. I can't wait.
Love it, Kenny. Appreciate it, bro.
Yo, man. Be good, guys. Good luck. I'll see you in the room.
Adios. Spencer, before we bring in Mike, can you tell me what we need to know about this morning? I saw some of the action on some of these banks, but anything worth mentioning?
Banks, Bank of New York Mellon.
Strazza loves Bank of New York Mellon.
I actually, full disclosure, I haven't seen the BK numbers. Okay, that's the first one we're going to bring up then. Great.
It's up 3.5%. That's the only number you need to know.
All right.
Yeah. Strazza's right again. Not to make his head any bigger, but he nailed this one.
Adjusted EPS 151.
I got it. Top line beat, bottom line beat. EPS 151 versus 143. Sales 4.59 versus 4.52 Billy. But you know, looking at the top and the bottom line is not all that really matters here. You can just look at the other two banks and JP Morgan and Wells Fargo to see for yourself. Wells Fargo also, I think, had the top and bottom line beat, but obviously the stock is not up 3.5% today. It's down 5.5% today because of the guidance and their net interest income coming in below estimates. And so there's more to it than that. But yeah, BK is looking okay.
And you're right, Spencer. There are other metrics that matter. The banks are one of those really nuanced industry groups, and this is something we're going to be doing a lot more work around soon with the beat report. But Bank of New York Mellon, I think they're excited. They really blew away the deposits estimate. So some big time deposit growth there. And that's all of the majors or the super regionals are growing while the communities and the smaller regionals kind of give away business. That's in the trend.
I don't think anybody really understands how many publicly traded community bank stocks there are. The vast majority of them are off exchange. They're over the counter. And there's thousands, right?
Are there?
Yes.
Okay, fine.
Thousands?
There's okay. So here's the thing, JC. A lot
thousands,
of these,
with an S at the end, plural.
Hold on. A lot of these smaller banks will have like 5 different securities, like for the same company. So like, or like different ticker, multiple share classes, right? So maybe that was exaggeration. There's a lot though, like more than more than you realize. I promise you.
There's more than 400 just listed on the major exchanges.
Yeah, there's another. I don't know. Maybe there's another 1,000. I'm not kidding. There's a lot.
I'll take the under. Sounds like a lot.
I'll show you later.
Anyway, the initial bank reports from the big 6 today not getting a warm welcome from the market. Citigroup is trying to figure it out, up 2.5% or 2.25% here. Wells Fargo, Spencer, you said that was a pretty bad report, so they're feeling that, down more than 5% this morning. And JP Morgan, who typically is just like a serial earnings beater, I feel like these guys almost always get a positive reaction, but not last quarter, and looks like not this quarter either. They're trying to figure it out now with a little bit of an indecision candle pre-market.
Well, because everything from JP Morgan was pretty much, it was like slightly above estimates, right? EPS slightly above, revenue slightly above, net interest income slightly above. Investment banking was actually, that was a nice one. Deposits.
Investment banking was the headline that I saw.
Yeah, that was the nice one.
They've done this before. So that's not a surprise.
Although if you read the statement from Jamie Dimon, you would think it was the worst quarter ever, because no one is better at showing his concern for the global geopolitical outlook than Jamie Dimon, and all the things that can go wrong. There's so many problems in the world.
Should we hit the big 6 bank index real quick, just to remind everybody what this is?
Yeah, throw it up.
And then maybe XLF too, because earnings is going to be the catalyst to either break these things out, or you're going to see them get stuffed at a very logical level as they pull back from these earnings reports, right? Big 6 bank, we've been here before, pre-financial crisis highs, the highs from a couple years ago, right there, right now, with all these companies coming up and reporting earnings over the next couple of days. 3 of them reported today. One's moving lower. The other 2 are trying to figure out where they're going. So if this goes, the next one probably goes to XLF. I'm thinking is the best place to be in the back half of the year right now, JC, with the way things are looking.
We talked about this before. I don't disagree. I think these cyclicals in general are going to do well. Financials, one of them. I think you could pick your spots too. I don't think it's going to be everything wins. Look at the slide 2, Spencer. This is very, very impressive. This XLF chart going out of new all-time highs, pushing it anyway. Very impressive. But this Bank of New York Mellon chart, again, hate to keep giving Strazza so much credit, but this is some base. First of all, this is a quarterly chart.
This is so cool.
This is a quarterly chart of Bank of New York Mellon, which, fun fact, ready for this fun fact? This fact is very fun. Fun fact, Bank of New York Mellon closed Q2 at the exact same price that it closed Q3 in the year 2000.
That's awesome.
I was still in high school.
That's why we call it price memory. I was born over here on the left-hand side of this chart.
I was born before any of this price action, so.
Optima doesn't have enough data for your birthday. Listen, this is as good of a base as you'll find right now. We've been talking a lot about the base in Morgan Stanley. This one looks just as good. So love this. JC, important to point out that while we still have 19 minutes until the market even opens today, based on what I'm seeing in the pre-market, follow through, right? We talked about these decisive candles.
I can't do this, Strazza. I'm not going to do this.
You're saying, what?
I'm not going to do this. I'm not going to let you do that. You're talking about follow through? The goddamn market hasn't even opened yet. You're sitting here talking about follow through.
Well, you were asking me if I thought IWM was follow through.
Not the close. Not the close.
I think you're going to get it today.
Pre-market.
Pre-market.
Sitting here talking about
the market could open for 5 hours. Where you been?
Sitting here talking about follow through. I'm supposed to be the franchise player. Sitting here talking about follow through.
Mm-hmm. I think you're getting it. I think you're getting it today. We finished.
I think you are too, but the
Follow-through.
market hasn't even opened yet. Let him dance. Let him dance. Bring on Mike. I want to hear Mike. I want to hear a nice, calm voice. Settle us down, Mike. Settle us down.
I'm all jacked up.
Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
There he is, Mr. Singleton. Why don't you bring us back down to earth here, huh?
I don't know if there's any reason to bring you back down to earth. I think you and Strazza are probably right. And you have to react to the price action, but I think that sector rotation is something that we've been looking for a little while now, and I think that yesterday's price action was some of the first evidence that we've gotten that it's going to happen. And if we get follow through today, I think that'll be important.
You see how he said if we get follow through today, because the market hasn't even opened yet, so we don't know, right, Mike? Tell him.
You can only anticipate it at this point.
That's
right. You can't say there's confirmation.
Even though I do agree with Strazza, I do think we get it. But all right, let's take a step back for a second. Is all of this being driven by the market's expectations of falling interest rates?
I wouldn't say the large cap, small cap divergence is so much related to that. I think what I would say there is it's probably more positioning than anything else. When you look at the commitment of traders data, hedge funds were positioned very net short Russell, and positioning in large caps was sort of moderate. But I think the idea that you would be net short the Russell 2000, very net short with the Russell above support, I call it 200, and a chart that looked overall pretty good. I think that was a lot of hedge funds not paying attention to the technicals or the positioning data, in my view. So you could also look at the RVX, sort of the Russell VIX relative to the regular VIX. The Russell VIX was way high relative to the regular VIX, and all that means is that investors were anxious about what was happening in the Russell relative to large caps. And I think a conclusion that you could draw from that is
there a denominator fallacy there because volatility in large caps was non-existent?
I don't think it's a fallacy in this case. I think it's a representation of, look, investors in large caps were somewhat complacent and investors in small caps were highly anxious.
That's right.
And if no economic event materialized to validate that anxiety, then I think that positioning was such that the conditions were such that small caps were going to outperform at some point. You never really know when that is, but I think that, the best day for small caps relative to large caps since 2001 would be a logical place to start to see sort of an unwind there, and maybe sustained outperformance from small caps. We'll see.
Are we buying bonds?
I don't love bonds, to be honest. I think if I had to pick a spot within fixed income, first of all, I'd pick credit over treasuries, but I would also pick the shorter end of the yield curve as well. Junk. Yeah, junk. Leverage loans. I like BKI.
Just go. Junkier the better.
Yeah, that's exactly right. When economic conditions are improving, you tend to see default rates go down and credit risk go down. So you want to be buying junkier stuff with higher yields. You don't really want to be going for treasuries.
How can you give me a breakdown of the HYG? How much of that is energy?
It's a lot. I don't know the number off the top of my head, but yeah, it's
gun to your head. What is it?
15%.
15%, is that a lot?
Relative to its weighting in the S&P.
There's that denominator fallacy again. You keep bringing up all these zeros. Of course, anything compared to zero. No, I was kidding. Kidding, but you're right. And then weaker dollar, probably not a bad thing for stocks, right? Another tailwind?
No, yeah, another tailwind. Dollar down is typically risk on. I think if we see the dollar break lower from here, I think that would be evidence of our sort of global reflation thesis, right? We're seeing pretty, good looking price action in emerging markets. Something that I've pointed out before is that the South African rand has been outperforming the US dollar since January of 2023.
Shout out to the czar. You don't get a lot of czar shout outs here.
No, you don't hear a pundit talking about the South African rand. And when you look at the South African stock market, it's pretty close to making a new 52-week high. Historically, you don't see South African assets going up, let alone performing anything US dollar related, unless global economic conditions are pretty good. So in our view, that's a reasonably good risk on signal. And we're just sort of picking on South Africa here, but you could also pick on other emerging market countries as well. And, like I said, that doesn't happen unless global economic conditions are pretty good and generally when they're improving.
Let's stick with that because you're talking about the strength in the South African rand, sure, particularly relative to other emerging market currencies. What about the real? No love there for the real?
Real, I don't have the chart on the top of my head, but something that I do look at, something that I've been observing recently is the divergence between the Dixie Dollar Index and the CEW ETF.
Yeah.
You've generally seen the dollar outperforming developed market currencies. That would be the Dixie. But what you've seen is that the dollar has been underperforming emerging market currencies. And so talk about denominator fallacies. What that suggests is that in general, emerging market currencies are outperforming developed market currencies. And that's another manifestation of risk on, right? Like that's the same trade almost as credit over treasuries or cyclicals over defensives, right? So you're seeing it across different asset classes. And I think that when currencies are agreeing with credit or agreeing with stock market internals, the signal is pretty reliable, right? Global economic conditions are improving. And generally speaking, you want to be positioned risk on, or else you're sort of fighting the trend, which I know personally I don't like to do. And I don't think that you do either.
CEW, shout out to our friends at Wisdom Tree, equally weighted 14 Forex currencies, just an FYI.
It's a great ETF.
It's a great ETF. It all the time. It doesn't trade. They're probably going to delist it because nobody's in it. But great information, though. Great information.
It is great information. It makes my life easier.
Let me ask you this. Does Eminem historically drop a new album in bear markets, or is this evidence of risk on here, Eminem's new joint?
I tell you what, I haven't listened to Eminem since Love the Way You Lie. So it's been a while.
This is the death of Slim Shady, I think is the name of the, is that what it's called? The new Eminem album? It just dropped this morning.
That's a cool name. I'll have to check it out.
The death of Slim Shady. Yeah, there it is. Coup de Grace.
Is this his final album? Is that the deal?
Aren't they all?
Yeah.
I went to Rolling Stone's final tour like 13 years ago or something like that. They just played around the corner like 2 weeks ago. Talk to me more specifically about the sector rotation that we're seeing, because mega cap tech got hit pretty hard yesterday. Small cap tech up 135 basis points, right? Small cap tech continuing to act well. Is it less of a sector rotation thing and more of a market cap rotation, just a group of stock, like sector rotation? I feel like it's like the wrong word for it. It's like a different segment rotation.
Yeah, I think that's right. I think I would call it a factor rotation. And
factor rotation. There you go. That's right. That's what it is.
And I think that the most obvious manifestation of that was large cap versus small cap. I think it's way too early to say that technology is no longer leadership. If you look at the equal weight technology RSPT over the equal weight S&P 500 RSP, it looks great. Mega cap tech was pushing up the major cap weighted indexes, but technology was performing reasonably well across the board, right? And I think what a lot of people don't appreciate, to bring this back to the macroeconomic view, is that technology is the most cyclical equity sector if you run the correlations with the different growth data and the different equity sectors. So when you see technology improving, or when you see technology performing well and outperforming the other sectors across the board, for example, looking at the equal weight ETF, that's generally a pretty reliable signal that economic conditions are improving, specifically the real growth data, right? Technology stocks are not really defensive, and they generally do participate in economic expansion. So as long as we expect economic conditions to remain good, we probably do want to remain long technology stocks. If we do see sector rotation, we want to start obviously rotating more into small caps. And I think that there are a lot of small cap setups that look really good. I'm sure that you're looking at biotech stocks. I didn't hear you mention them this morning, but in terms of what outperforms in the back half of the year, I think looking at biotech makes a lot of sense. I mean, XBI is a terrific looking chart. And I think that when you consider backtest and how various factors tend to perform under current economic conditions, biotech is a place to look.
Is the biotech trade and the regional bank trade the same trade?
I don't think so. I think regional banks, the way I would describe KRE, the regional bank ETF, is hanging in there, but not like a beautiful chart, right? I think you can be bullish as long as that chart is above 46.
No oversold conditions in the KRE all year. And I'm not just saying that now because it's ripping. I was saying that a week ago, 2 weeks ago, because it was kind of surprising, really.
Right. I think of it as one of those things where you don't need regional banks to be leading, but you don't want them, plumbing 52-week lows while you're bullish, because that would be counter evidence to your bull market thesis. I wouldn't say I'm bearish on regional banks. And I think you could even make the case that, the yield curve is steepening again and economic growth is improving. And historically, that means more loans and more profitable loans for regional banks. So you should expect them to do pretty well, right?
I don't know, Mr. Singleton. Are you overthinking the intermarket relationships here? Are you sure this regional bank and biotech trade ain't going to be just the same thing?
I think biotechs will do a lot better. We'll see. And I wouldn't be surprised if regional banks did well, but
this is a small cap factor situation, and regionals and bios are going to get their bids.
It might be. I think they're both benefiting from that sort of factor unwind like we were talking about. But look, if the fundamentals for biotech stocks start to really improve quickly, you're talking about 100% earnings growth.
What does that even mean? The fundamentals for biotech stocks, they're all so different. This one's with the cancer, and this one's got the brain tumor, and then this one's got the pancreatic, and they all do it. Like, what does one have to do with the other?
Well, they still trade with high correlations to each other, right? And when biotech stocks start working well, they see really fast earnings growth, and regional bank stocks just don't grow there's just not as much upside, right? They're just lower beta. I think you want more beta into this, factor rotation if it's going to happen. And candidly, I just think the charts for biotech look better. Again, not that the regional bank ones look bad, but when I'm going bottoms up, I see a lot of downtrends becoming uptrends, high volume breakouts in biotech. I see a lot of like white space in between the breakout and the next level of resistance for these biotech names. I just see a lot of opportunities there. And so, from a top-down basis, I think you probably want more beta on this trade than you can get just out of regional banks alone. And I also think bottom-up, to me, the charts just look better.
All right. Emerging markets versus S&P 500. Spencer Israel, slide 2, please, because this is an interesting situation. I want your take. I have a sneaking suspicion of what you're going to say, but I want to hear you say it. This holy shit. Like, this is like, Belushi in Animal House, where he's like, holy shit. Holy, right? Mm-hmm. And then go to the next one, right? So it's emerging markets, underperforming SPY for the last decade and a half. But little bullish divergence, little whipsaw to the downside.
Yeah, I think when you see a downtrend,
too soon.
Again, like I would say the conditions are in place for emerging markets to have a little bit of a stretch here where they outperform U.S. stocks. But that downtrend, I don't know that you want to be fighting yet, right? You really have to zoom in to get a momentum divergence there. I think, and look, I think that maybe you could go from 0.08 to 0.08 on this chart. And anything could happen. I think probably the better trade is EM, long EM, and short developed markets ex-US. I think that's probably the more...
So EM, long EEM, short EFA.
Yeah.
Huh. That's an interesting one. Long EEM, short EFA. You think that's too cute? You wouldn't just want to buy EEM and call it a day? If you want a more market neutral sort of situation, you go long.
I don't have any problem buying EM. I think it's a good looking chart. I just think I wouldn't, I wouldn't do a pair trade where I'm going long EM and short SPY. I think U.S. economic conditions are just too good. U.S. companies are just too good. Economic momentum in the U.S. right now is just too good. I think there's going to be a time for that trade eventually. I just don't see it right now. But the chart of EM is great, right? It's a nice base. I think it's above like $42 a share. I think it's a very bullish looking chart. I have no problem being long EM.
Dude, Notre Dame's going to lose a ton of games this year, huh?
Is that right? I'm sorry to hear that.
Dude, they're going to lose to Texas A&M. They're going to lose to Louisville. They're losing to Stanford. They're at Georgia Tech. That's an L. They're playing Florida State. That's an L. I mean, you're talking about 5-6 loss season for Notre Dame. What do you think about that?
I think they're going to start the year at with the ranking of like maybe 5 or 6, and then they're probably going to finish it unranked.
Wow, no pushback at all on that.
That's just been the pattern over my time being a fan there, is that they always start the year really highly ranked, getting everyone amped up for a great year, and then they ultimately disappoint me.
All right. Next year, Miami Notre Dame. They play back-to-back years, so we'll have to get together. Little tailgate action.
Oh heck yeah, I'm in for that.
All right, let's do that. I've never been to South Bend.
Oh, it's great. Yeah, you'll love it.
So I hear. I was supposed to go years ago when Miami played there, and unfortunately my grandfather passed, so we had to skip that. But I got it. It's on my bucket list. I don't think there's any place in sports that is higher on my to-do list, because I knocked out Green Bay. That was a big one for me. I think it's South Bend, and then after that, probably the Big House, Rose Bowl. Haven't been to those. I got a few to hit up.
What month is the Miami game?
I mean, they come out with Miami plays Notre Dame a whole bunch. They play each other like in 2040. They play like in 2032.
That's not enough.
The fact that I know this is kind of wild. So next year, 2025, Miami's at Notre Dame to be announced. 2026. Oh no, I'm sorry. 2025 is Notre Dame at Miami. 26 is Miami at Notre Dame, also to be announced. Then they play again in 2028 at Notre Dame. They play at Notre Dame in 2031. They play at home against Notre Dame, Notre Dame at Miami in 2032, 2034 home against Notre Dame, and 2037 at Notre Dame. So that would be in 13 years.
Wow.
They got it scheduled out pretty far.
Yeah, that is a long-term schedule. That's incredible.
Yeah. All right. Let's see. Catholics versus convicts. Let's go.
That's right.
That's right. All right. Best sector between now and the end of the year. Could be an industry group too.
I think it could easily be biotech. I also
know,
think,
you said it. All right.
Financials do look good. I think I probably would go with, capital market stocks over regional banks. But, like I said, it wouldn't be
Capital
surprising.
markets over regional banks. I don't know about that. What is your beef with regional banks today?
There's no beef with regional banks. I just think
little beef.
I wouldn't say I'm as outright bullish on regional banks, but maybe I need to do some more work on them. But
wow.
I think,
I mean, I don't know about that. Capital markets over regional banks, huh? That's bold move there. Right? What do you think there, Cotton? Bold move? All right. Ladies and gentlemen, Mike Singleton. Spencer, if you could drop the link to where people can reach Mr. Singleton. Does great work. Friend of the show.
In the description. It's all there. Check it out.
Love it.
Research.
We got Spencer up in the Catskills, gallivanting up in upstate New York.
Love it. Beautiful up there.
He already has the beard, that mountain man beard. He's already got that going.
Yeah, something like that.
Something like that. All right, Mike, you're the man. Thanks
you, bro. Thanks a lot, Mike.
Yeah, thanks, JC. Bye, guys.
Always a pleasure.
EEM over EFA. I like that. I don't know how I feel about that. Capital markets over regionals. That's an aggressive move there. I don't know about that.
Isn't he just going with the trend?
Isn't he going with the trend? Yes. Longer term trends. Yeah.
What's wrong with that?
Nobody said it's wrong with it. First of all, none of us know what's going to happen next.
Yeah.
I am just going to take the other side of that. I'm going to take the other side of that. I think I think if this small cap rally is for real, and I have a sneaking suspicion that it is, then it doesn't matter how good these capital market stocks are doing. They're not going to outperform regional banks.
I have to say, I really expected you to come on today, JC, and say, well, it was only one day, right? And
it wasn't only one day. Who said it was only one day?
In terms of that whipsaw rotation yesterday?
Yeah, it wasn't one day.
It wasn't one day?
No.
I don't think we could be finished talking about yesterday, though.
We're not talking about yesterday. Yesterday was the follow-through in a lot of these areas, Spencer.
No, it wasn't.
Yes,
I
it was.
have questions for you. I was just reading a little bit as you were doing your interview with Mike. I was listening and reading. So here are some of the headlines that I just came across on the Google about yesterday.
I'm sure these are good.
Worst day. Tech-led sell-off. And then I look at some breadth charts passed along by Sir Grant Hawkridge while we were sleeping. And he's telling me it's the best day in more than 20 years. So if you look at the percentage of S&P 500 components that outperformed the S&P 500 yesterday, we don't have enough data to tell you when it's been better than yesterday. So was it the best day in a long time or the worst day in a long time?
It can be both if you're talking about different things, yeah?
I don't think it's the best or the worst.
I just supported it with data.
No, I know, but
It was
it's not about
literally
the best or the
worst
worst.
day.
It's about the largest components of the S&P 500 were the ones that got hit yesterday, and the smallest components are the ones that did the best. It's not good or bad. If anything, it's good because it's just further evidence of sector rotation. I would say probably more neutral than anything else, leaning good.
It goes back to the age-old question of what is and who is the market.
The market, it's a market of stocks.
Doesn't matter.
And sector rotation is the
He-
lifeblood of a bull
He wasn't,
market.
he wasn't actually asking you, JC.
I know. I'm being so rhetorical. Stop falling for it.
Sorry.
It comes down to what do you own, right? It doesn't matter if it was a good day for what Wall Street Journal thinks is the market. What is in your portfolio? Was it a good or bad day for that? Because the vast majority of stocks did great yesterday. However, the vast majority of people probably have overweight positions on the biggest and best stocks, which did terrible yesterday. I think it's important to have exposure to both of these themes because we saw massive profit taking in the best ones and now money rotating into some very unloved corners of the market, right? I think it's prudent to have exposure to both the leaders and the laggards. It goes back to another age-old question that we batter our brains with. Do you buy the laggards and bet on them catching up to the leaders, or do you buy the leaders and bet on them continuing to lead?
No.
I think you do both.
I think it depends on your time horizon.
You could take profits and feed the ducks in something like Google. Targets are being hit across the board. 161% extensions, a lot of them getting hit in the mega cap growth space. You could feed the ducks. You could take some of those winnings and recycle it back in to some fresher breakouts for sure. But do you want to sell these Mag 7 stocks over the longer term? It depends on who you are and what your goals are, right? What is your time frame? I don't think you sell the good ones just because of one bad day at all. But I think you got to own some of the other ones, right? So however you need to do that, you want exposure to these fresher trend reversals, biotechs, small caps, right? There will be more.
I think I got it. We can call this the Charles Dickens market.
A tale of two. Yeah.
Because it was the best of times and the worst of times at the same time. I'm done.
Clever, Spencer.
Thank you.
That was good. A true Ernest Hemingway. Look at him dropping literary knowledge.
You should go see Charles Dickens's grave.
Mm-hmm.
It's in Westminster Abbey in London.
Oh, I saw that. Yep.
So you got Charles Darwin is in there, and they're
on the floor.
A cast of characters that are buried in there,
That's
legends.
impressive. It's spooky that they're all right next to each other. All these famous, historic figures.
All these not Galileo, but one of those guys, one of those astronomy guys. They're all in there.
I think he was Italian.
Look, one more chart from me, and then I can finish my rant. Another important thing to be mindful of is if you own the indexes, and we do get, any significant sustained rotation out of the mega caps that drive the indexes. Throw up the small cap S&P 500 chart with all my arrows on it. We've seen periods before where small caps do absolutely nothing, like all of 2021, while large caps, S&P 500, dragged higher by the Mag 7 and all your favorite names, performing spectacularly. That's been going on again for really more than 2 years now, JC. All of 22, all of 23, or most of 22. Just sideways, nothing from the Russell 2000. When you look at the small caps line here in blue, think of this as the broader market. Think of this as most stocks, right? And then think of the black line as the 10 best stocks. So if you're in the indexes, if you're in SPY, or if you're in Qs, and those stocks stop working, this trend could come to an end, where all of a sudden, maybe the Russell 2000 is moving higher, or breadth is expanding beneath the surface, and most stocks are doing better, but the S&P 500 and the NASDAQ and all of our favorite vehicles in times when mega caps are leading, are stuck in the mud or working sideways, consolidating.
And then just remember, this is the Russell 2000 index that he's pointing to, which has a ton of biotechs, a ton of regional banks, hundreds of them, each of those. This chart doesn't show what small cap industrials have been doing. Small cap industrials act like mega cap tech. That's how well they've been doing. By the way, small cap materials also been doing very well.
And it wasn't.
Also, you don't have mega cap materials.
And it wasn't.
You never will.
And JC, it wasn't rotation out of tech yesterday, like you pointed out, right? There was a lot of rotation actually into tech.
Yes.
A very small handful
of small cap tech index was up 135 basis points. Yeah. Why don't you run a ratio between the small cap tech index and the large cap tech index and see when was the last time you had a spread that big?
Small cap, large cap tech?
Yeah.
I did that yesterday. Let's see.
That's a good one. When was the last time? What was the difference? What was the
and also, so on that note, back to the rate of change chart while I look this up, Alfonso, the IWM XLK. JC, last time this happened, right? Because we like to go back to, last time was literally the market peak in March of 2000. Tech stocks stopped going up on an absolute basis last time we were at this level.
It was about 400 basis points, roughly. Just under that, I think. Yesterday, between small cap tech and large cap tech.
But is this a spooky chart?
Spooky for who?
Last time we were here.
Yeah.
And this trend reversed. It was March of 2000. It was the moment that stocks peaked on an absolute basis. They stopped going up.
Yeah. So?
If you own mega cap techs or tech stocks, I'm saying when IWM XLK came off this level and rebounded, it was when stocks stopped going up and then the market crashed. It was called the .com crash.
Familiar?
Back to the scene of that crime.
So?
Some people could look at this and say maybe the market's going to crash again. That's what that means.
Oh, people are definitely saying that.
That's why I tweeted it.
But I think that's just dumb. By the way, for the record, just put up any chart where XLK is the denominator and zoom out, and you're going to see a lot of turning points in all of those charts going back to March of 2000.
Trends persist until they don't, right?
Persist until they don't. That's right.
And then they reverse. That happens sometimes too.
That's right. I am impressed with these small caps. I really am. Yeah. I really am. I think this got legs. If I'm wrong, I'm wrong.
Can I say about the follow through now? I got 9 minutes. 9 minutes in the bank here.
Nope.
Okay. It's happening, people. Looking good out here.
Charles Henry Dow taught us that closing prices are the most important prices. And even though I agree with you that I believe we're getting further follow through today, because I don't think today is follow through. I think yesterday was the follow through in a lot of these cases.
Yeah.
This is just sticking the landing mostly. I think if you're really looking for serious follow through, next week would be that.
Yesterday could not have been follow through for the Russell 2000 is all I'm saying. Maybe some of the other trends, but the Russell 2000, that was the breakout candle coming off of the volatility contraction.
You had some nice day. You had a nice day the day before in industrials also. And again, I don't just think that this is a small cap story. I think Mike Singleton nailed it, talking about the factor rotation is really what it is, and it's not just small caps. It's a whole bunch of stuff.
Well, I think you're right. We're absolutely completely ignoring the biggest point of why is this all happening? Throw up my dollars and rates chart.
Rates had it right. Right? The bond market had it right.
That's what's driving all of this. Markets pricing in maybe lower interest rates, lower dollars. We would call these intermarket tailwinds. I think for them to really be tailwinds, we need to resolve the larger ranges, but we're now headed in that direction, which is a change of course from the entire first half of the year, where these looked a lot more like headwinds and stocks were rallying anyway, a lot of them at least, right? Maybe not all of them. Now, if these roll over, what are stocks, which have already been doing well, going to do now?
Yeah, because think about it. Dollar and rates had been rallying most of the year, and you had a lot of stocks struggling, particularly those that have the most exposure to these, right?
Yep.
And the fact that we've been seeing improvement in breadth, we've been seeing that sector rotation as these have started to roll over, and then that really got going yesterday, to your point.
Think about the groups that we're talking about, JC. Home builders, regional banks, real estate, biotechs, even small caps, interest rate sensitive stocks throwing an absolute party. They jumped this little breakdown too, right? The banks jumped this while Powell was talking earlier this week.
Are we going to overthink the yen or no?
I don't even want to look at the yen.
Ooh, wow. Hating on the yen.
I mean, why? Talk to me.
I mean, you want to talk about how many Sigma move was that yesterday? A lot of Sigmas?
All the Sigmas.
So, like all the Sigmas. Sigmas for days. Right?
Dr. Horton. I hope you owned some DHI.
Dude, these home builders.
He's DR Horton.
Consumer discretionary.
Yeah.
No? Consumer.
Not my favorite place.
You're sitting here talking about homies.
Tesla got punched in the face yesterday.
Oh, sorry. It was only up 60% in like 2 weeks or something crazy.
It was ugly candles, all I'm saying.
Huh?
It was an ugly candles, all I'm saying.
Well deserved.
So what's going on there is the robo-taxi stuff. So look at the Uber candle yesterday too. Both of these stocks are really moving on headlines about the robo-taxi. So Elon Musk lied to everybody again, and the robo-taxi is not ready or not even close to being ready. So they had to delay the launch, and Uber caught the bid, and Tesla was down almost to what, like 10%, right?
Wait, I can't believe that I'm about to say this, but you sure that was the reason? Is that the reason that they're giving you?
Yes, it's been happening for a couple weeks now on these headlines. I didn't believe it either at first. I was laughing.
JC, is that the reason? Well, JC, what do you think? Is that the reason?
This guy is so full of shit.
There were more sellers than
It was a factor rotation, bro. Robo taxis. What the fuck are you talking about? Robo taxis.
Spencer, you could always buy it back.
I was in Tesla for like a week. I'm not
talking
anymore.
about the Uber. Talking about the Uber.
Look, I made a couple bucks. I'm okay on that.
What a day in Uber yesterday, by the way.
Big stick.
Big stick. What about the trannies?
They don't excite me.
Big sticks.
They don't excite me. Not here.
Wow. Trannies don't excite you about after yesterday's move? That was a move, man.
I'm really not into it.
Wow.
So
not into trannies.
Are you as excited about earnings season as I am?
I forgot it was earnings season. That's how excited.
The next 2 weeks are going to be spectacular, especially because August usually kind of sucks just from a more storyline standpoint. I'm not saying from the market, just in terms of like things happening. July is like the crescendo of summer, and then we get this like everyone goes on vacation and blah blah blah. The next 2 weeks are going to be awesome, especially in light of what's happened with the performance of these mega caps in the last few months. So it's going to be good.
You know what doesn't suck, Spencer?
No.
July, throw up slide 37.
How many slides do we have today?
July is the best month, like objectively speaking, in most ways. Also the best month for the Dow Industrials. No takers.
Yeah,
loading up on the diamonds.
I also think it's like very fitting and cute and somewhat ironic that we're getting this rotation out of mega caps down the cap scale, basically a couple weeks into the third quarter and the second half of the year specifically, because you got a ton of articles in the last, at the end of the month / early July, around July 4th, about how if you didn't own the Mag 7. If you didn't own NVIDIA, you were lagging. Every active manager is lagging, the index because they're not as exposed to NVIDIA as, and they're underweight, and it's all that's it. That's what it is. And if you don't own those 5 stocks, you're falling behind. Get with the program already. And now here we are 2 weeks later, and that is,
Slide 2, please, Spencer.
I just find it very cute.
Slide 2. This is something. This is really something. And I might be old man, right? Old school. This means a lot to me.
What are the largest weightings in this? I don't know.
I mean, you know the names. I mean, there a lot of them look great.
No, I don't. I don't
outside
know.
of the airlines.
That's why I'm asking.
It's price weighted, right, JC? It's price weighted too.
It's price weighted. So look at the largest, the largest ones. But essentially, you've got Ryder, Expeditors, Uber just got added in February. They kicked out JetBlue.
FedEx.
You got CSX, Norfolk Southern.
I think FedEx, Union Pacific, and Norfolk Southern have the highest stock prices.
FedEx, UPS, and then you've got the truckers.
Old Dominion would be next, $190 a share.
Yeah, but JC, isn't there a lot? There's so much that looks better than this.
Yeah,
there's
like
so
you don't
much that look better than this.
Yeah,
none of these stocks look good, JC. Like just flip through the components.
I flipped through the components. You're not flipping through the components if you're sitting here telling me that none of the stocks look good. You're not looking at them.
Which one looks good?
Expeditors, Ryder. I mean, these things have been moving.
Ryder looks okay. It looks a lot better than the rest.
Oh, sorry. All-time highs today? Are you not entertained?
It's not an all-time high quite yet.
Oh, it's not an all-time high in Ryder?
No, it was May 15th.
JC, let him dance. It's been 20 minutes.
Is it follow through?
No, this is an all-time high, bro.
Okay.
If it closes right here.
Everybody has their own charts at home.
If it closes right here. Here I am getting ahead of myself. See that? It'll be the highest weekly close in the history of a one Ryder systems.
Oh, we're doing weeklies. Got it. We're doing weekly closes. We're talking about weekly closes. Got it.
Even a daily, it would be the all-time high for the day too.
No, it wouldn't.
Yes, it would.
128.24 on May 15th. Stop it. You stop that.
Hey, that's my birthday.
All right, you're right. 128.24, and we are at 127.88. All right, it wouldn't be the highest daily close.
Did you see some of these?
The day is young. The day is young.
Have you seen some of these cool earnings graphics we're making?
Yeah, they're dope. All right, I got a recess. You guys got any more charts? I got something good.
No, let's do recess and get out of here.
Go for it.
Wait, what are you laughing at? I don't know. Actually, want to know what you're laughing at. I'm laughing at something that I should.
I like these EM SPY charts.
You like EM SPY better than EFA?
I don't know. It's hard to say. It's hard. Yeah. I don't like. Listen, I'm not gonna. It's a bull market. I don't need a pairs trade. I'm not trying to like offset my winners with losers. I don't understand that. It's really not for me. I don't have to play that game.
Some people do. Strazza does not. That's fair.
All
right, Spencer, show 'em. All right, just want to give a shout out. I want to get the name of the place right. It's called John Kak. Yong Kak. JONGKAK, Korean joint in the hood of Baltimore, and it was delicious, right? Wasn't that good, Spencer?
I was actually, no joke, I was thinking about that seasoned pork on the train. The morning after, I was thinking, it was like 8 a.m. I was thinking about that pork. I was like, God damn, that was
good.
Good.
The pork, and for me to say, because the steak was good, the pork was better.
Yeah.
Yeah, that sounds awesome. I can't believe you guys didn't invite.
Fantastic. I mean, it was in the hood. I mean, I was outside on the phone saying goodnight to my family, the kids. I was rushing to get back in the restaurant. I never felt so safe in a Korean restaurant before.
That's funny.
So that's recess number 1. So shout out Young Kak. And the other thing, I want to give a shout out to Thanksgiving. Louis last week made a whole blog post about Thanksgiving because he thought that the 4th of July was Thanksgiving because he's in New Zealand. Way off. But Thanksgiving is so great that I believe, and have for a long time, that I believe it should be celebrated more than once a year. And because I have so much to be thankful for, I do celebrate it more than once a year. And we celebrate it in the spring or the summer. We're going to have our Thanksgiving next week, as a matter of fact. Turkey, stuffing, the whole thing, all out. Everything about it.
That's
Everybody's
awesome.
invited.
That's fantastic.
Lot of good eats. You know, going with the Pinot Noir. We have friends that kind of get creative. I'm like old school traditionalist when it comes to Thanksgiving. I go red Burgundy. That's just how I roll. I get creative in other parts of my life with Thanksgiving. Keep it simple, stupid. Red Berg, Pinot Noir all day long.
I love that. Good for you.
Yeah.
If I like Thanksgiving as much as you, I would want to have it every day too.
Yeah. Thanksgiving is great. It's great. It's my favorite holiday.
My recess, we started the show talking about books. I figured I'd talk about my book of the summer. It's backwards. Let me flip it around. Hold on, so you can actually read the title. It's Better to Be Feared. This is a book about the New England Patriots dynasty. Let me flip my camera around.
Are you really reading that?
I heard of this.
There we go.
Yeah,
So this guy, Seth Wickersham, he is probably one of the best sports reporters out there. He's worked for ESPN for a long time. I'm only 2 chapters in, so a disclaimer. But if the rest of the book is anything like the first 2 chapters, this thing is awesome. He talked to everybody, and he's got all the gnarly details and the nitty gritty, and it's fantastic. So this is my book of the summer. It's Better to Be Feared. That's what I got.
It's awesome. So we're going to the Everglades this weekend, JC.
It's hot in the Everglades.
I know. I'm gonna do it tomorrow morning. We're always going to Miami, like every couple weeks. It feels like extra hour. You can go do one of those airboat rides, see some alligators, see some alligator wrestling or something.
Oh yeah,
trying to really get into it.
Will you eat gator? Will you eat gator?
Yeah.
It's pretty good. It tastes like chicken.
I haven't done this. Like my grandpa took me when I was probably 10 years old. So I'm gonna go check it out.
The airboat rides are really cool.
Yeah.
I was on MTV Dismissed, like in 2003, I believe, and so they walked up to us at a club, and they're like, "You want to be on MTV Dismissed?" And me and my buddy were like, "Yeah," me and him, and then he ended up bombing out, so it was just me, and I was on the show. And they were like, "Okay, so where do you want to take your date?"
Wait, what is this? This is
MTV Dismissed.
Explain.
Oh my God! It was the dating show.
It was a dating show. It was 2 guys fighting over one girl, right? Yep. And then you take her on. You each take her on a date, and then at some point the other guy can come in and call timeout.
Yeah.
And he gets to interrupt your date, right, and do the same thing. So anyway, so they're they give me a whole list of things. I'm going to be on the show. MTV Dismissed, the whole thing. I was like, all right, I guess I'll be on the show. I mean, how old am I? 21 years old. Okay. And so they're like, where do you want to take your date? And I was like, oh, we could go, go to the club. We could go to a nice dinner. We go to a lounge. I made all these places where I would legitimately take a girl out, right? Mm-hmm. Especially on somebody else's dime. So they're like, okay, your date, you're going on an airboat ride in the Everglades. In August. All right. So I know exactly where Strazza is going. So get this, because the whole thing is staged, right? Maybe you guys didn't know that wrestling's fake too, and Santa Claus doesn't exist. So dating shows are also fixed. So I didn't get to take the girl to any of the places that I wanted to go to. I took her on an airboat ride, and get this, I had a picnic set up on an island in middle of the Everglades that we had to take the airboat ride to. So we're sitting there in this island with I had this picnic set up. There's mosquitoes everywhere. right?
Surrounded by alligators.
Surrounded by alligators, right? You got the guy with the aluminum foil thing getting the light right, right? I mean, it was quite the spectacle. So there was one part of the show where like I had to like kiss the girl and like put my hand behind like her ear, right? And then the guy was supposed to come in and interrupt us and call timeout like in the middle of that. And he kept screwing up his line. So we kept having to take like 3-4 times from like me trying to kiss this girl and she's sweating. Like both of us are just sweating bullets. It's hot as hell. They make the poor girl look like such a bitch. She was the sweetest, nicest girl ever. The show, they made her look like such a terrible person.
So who got dismissed? Who got dismissed, JC?
I got dismissed. It gets worse. It gets worse. Not only did I get dismissed, well, I knew that first of all, I took the girl to the Everglades in the middle of August. So like I was set up for failure. But also at the end, my line was, of course she's going to pick me. My name is JC. They call me Just Chosen. That was my line. So then I go to college for my senior year. And for the first 6 months of my senior year, I had girls coming up to me calling, hey, Just Chosen.
What
Just
the
Chosen.
hell? What?
That's a true story.
How is this the first time that I'm hearing this story, though? Like, how did that happen?
That top fiver. That's a 5%. Yeah.
True story.
All-time great. Yep. Wow. We'll have to shorty this, and then I'll go and search for the video everywhere.
I have friends that work on at MTV that have sworn to me that they'll get the footage somewhere.
Were you on The Bachelorette too?
Dude, you want to know the worst thing? I had 2 outfits, right? One for each date or something because I had to interrupt the other guy's date, which, by the way, was at a really nice lounge in South Beach. So that's another story.
You got screwed.
I didn't do this on purpose. I had just broken up with like my girlfriend, and I didn't do this on purpose. The 2 outfits I wore she gave me. So I didn't hear the end of that.
Oh, I thought you were going to say you sweated through the first outfit. You had to change.
Oh, I sweat through, but hard.
Yeah, okay.
Oh, yeah, hard.
All right, listen, it's Friday, and on Fridays after this show, our video podcast premieres on YouTube. So Off the Charts, Strazza and Sean talk to Michael Noss. That episode on the YouTube is going live in 2 minutes. But if you're more of a podcast person, it is already on Spotify, Apple Podcasts, wherever you get your podcast, which is, let's be honest, it's Spotify or Apple. So check it out, Off the Charts with Michael Noss. It's there, and it's, again, the guys did a tremendous job talking to traders, not about the markets, about everything else, right? And it's a nice change of pace, so I highly recommend it. You guys did great, as usual.
You gonna enjoy some bull market wine tonight, JC?
Some bull market wine. Sure. I mean, we're supposed to go to a carnival tonight, but the weather sucks, so I don't think we're going to a carnival.
Don't go to a carnival.
I like carnivals.
No.
All right.
People.
I like carnivals.
Smell.
Carnies, nomads, smell like cabbage, small hands. No. All
right. Have a good one, everyone.
Adios.
Happy Friday.
Happy Friday.
YOLO responsibly.